House prices are up 30% since 2019. Your house is worth 30% more money. Think about that. It's literally raining cash for you. Everything is going up. It's such a great time. Everybody feels rich. But what happens when it all shuts off? I'm Chris Naugle, and today you're going to hear all about what happens when the money stops flowing. This is What Now, What's Next. Let's dive in. Welcome back to What Now, What's Next. Let's talk about your house and how much money it's worth today. It's gone up 30% since 2019. You're rolling. We're all rolling. We got all this money in equity in our house, and we brag about it. We go out there and we tell our friends, our family, our coworkers how much our house is worth. Some of us even go out and we take out home equity lines of credit. We put additions on, we put pools in, new kitchen, new bathroom. It's awesome. And we all wish it would just keep going up, right? But the Fed has a different plan for you. The equity in your house, whether it's actually in motion or sitting lazy on your couch, eating your potato chips, drinking your soda, watching your TV while you're out working for money, it really doesn't matter because all of that is about to go away. The equity in your house that you hold so dear to you is about to be taken away. Because the Federal Reserve is doing a good job of slowing the economy down, putting the brakes on the economy by raising interest rates 7 times in 2022, by unwinding the balance sheet, and by saying relentlessly that they will not stop until they get this under control. They want you to believe that they're actually super concerned about inflation, how much your groceries have gone up, how much the goods and services you buy have gone up, but that's not their concern. The Fed has to raise interest rates. Why? Because they know the economy and the markets are going to tank. And when they do, they need ammunition to fight that war. And what is that war? It's called a recession. A recession can also turn into a depression if not checked. So how does the Fed fight that? Turn the printing press on, drop interest rates to near zero. But if interest rates are already near zero, they got to get them up super fast. And getting them up super fast is slowing the economy down. Right now, June of 2022, we are seeing the brakes being put on. That's what the Fed's going to do to the economy. It's already happening, but they're just pumping the brakes. You see, when they do this and they slow the economy down and they suck liquidity out through the unwinding of the balance sheet, which is selling bonds in the open market, all of our assets that have been going up, up, and up, all start going down, down, and down. That includes the equity in your house is about to go on vacation, and that vacation is called gone. And when it does, you're going to wonder what happened. You're going to wonder why you didn't do something sooner. You're going to wonder why you didn't tap into that equity in your house, because once it's gone, and it's probably not coming back from vacation for at least a decade. How do I know this? Well, let's look at the past. Let's talk a little bit about what's happened in the past so that you can get a glimpse of what's next. You see, let's go back to 2008. We could go much further, but let's start there. In 2008, when the Great Recession took hold, yes, it was driven by real estate. Real estate prices fell significantly. There was a lot of risky driving going out there. Everybody's selling these mortgage-backed securities, these CMOs and GMOs, and whether you know what that is or not, doesn't matter. It brought the price of your house down significantly. And if you had had a line of credit back then, or equity in your house back then, in just about a year after the Great Recession started, the home equity line of credit that you had was frozen. The home equity line of credit that you wanted to get was nowhere to be found. The banks weren't lending. Are you getting some value from this video? If you are, click the subscribe button and smash that alerts button so that you're notified every time we do one of these videos to get you ready for what's coming. Let's talk a little bit about the pandemic. During the pandemic, this wasn't that long ago, banks started freezing lines of credit, home equity lines of credit. Banks stopped issuing home equity lines of credit in the fear that real estate prices might go down, in the fear that the markets might continue down, down, down. But then it didn't. It bounced. It went back up like a nice pretty V. The Fed printed $5.1 trillion, traded it to the US government in exchange for government bonds, and everything went straight up. But now we're about to enter the next cycle, the downward cycle, the deflationary cycle, or maybe stagflation, and it's about to go straight down. It's already happening. I think we've had about 8 straight weeks of a declining market with only a couple up days. And those up days, we hold on to those so tightly.
Oh my God, the market's up, it's going to be okay. Should I buy? Should I start buying now that everything's going back up?
And then the next day, it goes down. And the next day, it comes up and then goes down. And the next day, it comes up and it goes down even more. It's an illusion, folks. It's going one place, and that's down. Because with what the Fed's doing, with raising interest rates and selling off bonds and sucking liquidity out, it can't go anywhere else. History proves it. So what about all that equity in your house? Let's talk specifically about that. During the pandemic, a bunch of wealthy people I know, incredibly wealthy people, got together and we all did meetings, much like this. And we talked about, what do we do? Well, it was a huge buying opportunity. Everything was down. Stocks were down, asset prices were down, housing was going down, everybody was scared. There was blood in the streets during the pandemic, definitely blood in the streets during the Great Recession, and it was a massive buying opportunity. But the only people that could buy were the people that had access to capital. So here's what we did to make sure that all that money in our houses didn't evaporate if the thing should break loose. We went to all the banks where we had lines of credit and we pulled all that money back out. That's right, we took the max loans from our lines of credit. The money came from the line of credit and went into the bank account associated with that line of credit. Then what we did is we took the money out of that bank and we moved it into another bank. We took some out of that bank and we moved it into another bank. We took some out of that bank and we put it in our private banking policies, those specially designed and engineered whole life you always hear me talking about. Then we took some of that and we put it in another one of those private banks. You see, we played the cup game. We had all this money that was all money that was in lines of credit. We took that money out and we moved that money into different banks in different banking systems, so that when that bank that issued that line of credit said, hey, we want our money back, I was like, I don't know where it is. Is it under this cup? Nope. Under this cup, you play the shell game. You start moving the money around. You just keep moving around. Is the rabbit under this one? Nope, not under that one. Under this one? Nope, not under that one. You guys have seen that with magicians before. Well, myself and a bunch of my wealthy friends played that same game with money during the pandemic. But then what happened? Well, everything started going back up. So we no longer needed to play the cup game. So we took the money back out of the investments, which had gone up in price, and we paid off all the lines of credit. Business as usual. No interest owed back to the banks. But now, here we are again. June 2022, you're already seeing the price of real estate come down off of its highs. You're already seeing builders slow down the amount that they're building. You're already seeing pricing start to adjust a little because of supply and demand. You know what's next for you? Your house is losing value right now. While you sleep at night dreaming of little sheep jumping over the fence, your house is losing value. And as your house loses value, you have access to less and less and less money. And that will start to go faster and faster. Think of dominoes. When you push the first domino over, it all goes quick. Well, that's how it's all going to go here. How long are you going to wait? You're going to wait till it's all gone? You're going to wait till all that equity in your house is gone? No, you're not. You're going to take some action. You're going to do what we did back in the pandemic. You're going to get your house in order. You're going to get your money in order. You're not going to let them just freeze your lines of credit, are you? No. So let's talk about some action steps for you. You don't want to lose the equity in your house. Nobody does. But that requires you to take some steps right now. Do you have a home equity line of credit already? Oh, you don't. Well, now is time to get one. And if you don't get one, you won't be able to get one. How about that?
How about that?
So it's kind of a use it or lose it kind of scenario. So rush over to your bank, credit union, community bank, and apply for a home equity line of credit. They will gladly give you up to 80% of the equity of your house. And as long as you've got that, let's get that money available. Because how much money does it cost to get a home equity line of credit? Zero in most cases. Usually the bank will even pay for the appraisal. It costs you zero money if you don't use that. So if you get the home equity line of credit and they issue you a home equity line for, let's just say, $50,000, that 50 grand costs you nothing until you take that money out. And we're not going to quite take it yet. We're going to wait for a little more blood in the streets. We're going to wait for this thing to go down because we've already got the home equity line issued and we've got that money sitting in that line of credit, but that doesn't mean your money's protected because at any time that bank can freeze that line of credit. And you want to be ready to take that money out of that home equity line of credit or that line of credit and use that money to make money. So as you start seeing things deteriorate, this is the hardest part. When you take the loan from the line of credit, when you take that money out, the interest starts to tick away. And now all of a sudden they're charging you interest on that money. So what we want to do is we need to very quickly get that money working for you. I do it by lending money out at a higher rate. You might be able to do it by taking that home equity line of credit and paying off the credit cards that you currently have, taking the money you're paying the credit cards and then put that money back into the line of credit. You see, if the money's not in the line of credit and the money's not sitting in the same bank that the line of credit is in, then they can't take the money back. Revert back to the story of the cup game. You take a little bit of money from your line of credit, you move it to a different bank, a line of credit goes to a community bank, a credit union, or maybe you set up one of those privatized banking policies. Companies like Quantum RE, which is one that comes top of mind, they'll give you the equity in your house and they won't charge you any interest on that money. They won't make you make monthly payments and they won't dive deep into your credit score like the banks do. So if you can't qualify through a bank, maybe you should look into a company like Quantum RE because they'll give you the equity and what they're going to do is share in the future appreciation of your house. But if you think your house is going to depreciate, they also will share in the future depreciation, but they give you your equity, your money today. Check them out. QuantumRE.com. And then all you do is after everything starts to fall apart and there's blood in the streets, now you start to deploy that capital. You start to go out there and buy assets when they're off of their highs, when they're 30, 40, 50% lower. Some of those assets could be stocks, mutual funds, ETFs. Some of those assets could be real estate, apartment buildings, storage centers. It will all go on sale, folks. The question is will you have the cash to buy it? Because today you do. You've got equity in your house. All your assets are bubbled. Get out. Get access to that cash and get ready to deploy that money for one of the biggest buying opportunities of your life. But if you're not ready for it, it's going to be one of the worst periods of time for your financial future. Folks, I hope you enjoyed this episode of What Now, What Next. If you enjoyed this video, make sure you click the subscribe button and smash that alerts button so every time we do another video, you're notified. And not only that, check out this video all about what the Fed is doing that's going to create this collapse. Till next time, talk to you soon.